Hey, good morning, folks. And I tell you, more and more selling is stepping in because the pain factor is going up tremendously for people that are long. And I think you're seeing that as we make new monthly lows. In fact, the QQQ this morning when it broke 595, that was a new monthly low. And the QQQ right now is at 592 to give you an idea. Okay. And I think that is something that you got a market here in November that's diverging from historical numbers, and you sit there and look at it. So here's what we do: we do a few comparisons and look at things. The problem that's out there, and I've seen this many times, you've got a couple catalysts coming out. Let's talk about those. The big catalyst coming out tomorrow after the close. That's Nvidia, but Nvidia is acting as if it's down here at 180. Remember, it was just a short while ago, it was at 220. So it's pulled back quite a bit from its high, and it keeps making lows. I think that's pretty interesting going into earnings. Typically, if earnings are going to blow out, you're going to go higher, you'd see some positive numbers there, and that troubles me a little bit. I got to be honest about that one. That troubles me. And because it could actually lead us out of what's going on here in November. And the other thing that troubles me is historically November, if you go back to 1950, has been one of the best trading months of the year. Now it doesn't start out that way. We're going to get into the slides. We'll go to a live market and look at things. But I'll tell you right now, the market itself, to show you how weak it is, if you take the reference bar this morning, we went lower, the bar after that, we went lower, the bar after that, and we're lower here at 11 o'clock, the bar after that. So Genesis is going to be very important to our analysis. After we get through Genesis, we'll cover that also. A powerful tool we have or in analysis is watching Genesis. It's easy to see that if you are going to get a turn in the market, it's going to happen. It's going to happen, I think, in the next hour and a half. So keep that in mind because you're down here at 6601 on the S&P, and we're 125 points below the key number for the month. Okay, and I think that's something that's interesting. All right, so let's get into the slides, if we will. We got a lot to talk about. Let's get there. If you look at risk and market, you always worry about risk, but I worry about it every time I make a trade. And right now, the risk is up quite a bit. Okay, the risk is up quite a bit. In my opinion, you got a VIX right now, and I'll just highlight we've been holding above 20, and we're actually at 25. So that's a pretty big warning sign that, that's just a warning sign at 25, my opinion. Big announcement this Saturday night at Rester Now. We're going to do a special broadcast on Saturday night. Formula to take, I've been bullish on bonds. I did a lot of work. I've created something that's really going to help you to take advantage of it. That's Saturday night. We'll call it the Saturday night special. Maybe we can repeat what John Travolta did and have a little Saturday night fever. Y'all remember that? Saturday Night Fever? Yeah, that was a heck of a year when he did that one. Staying alive. That's what we'll be doing. Anyway, dtitrader.com/Saturday. Monday through Friday, we're here every day at 11. We've been pretty good about showing up and educating and looking at the market here at midday. I hope we're helping. The general trend that we've had is that we've been very careful. November historically and what's ahead for this year. Let's look at let's take a look here and get you up to speed about November's. November historically starts the year's best 3-month span. So if a low is made in November, it will start a run for the next 90 days, takes you all the way into January. Okay, that's why November is important. It's the number one S&P month since 1950, folks. Now think about that. Over all these years, from 1950, 75 years, you've got stats and you got people that know that computers are programmed. And so you got to ask yourself, what's going to be the catalyst? That because of November's history as the number one month, it makes me reluctant to, put on any long-term shorts during this time period. Okay, that can change though. That can change. NASDAQ is stronger, producing a 6% gain between November 1st and January 31st. So you ask yourself, you look at the QQQ, you say, okay, where would it go to if we did get a 6% gain, which is average, okay? 673. Well, you're looking at it at 593 right now. So I think what we have to decide is if it does change bullish, how to recognize that. And I'll help you navigate that. I haven't seen anything yet to tell me, though, it's time, okay? But keep that in the back of your mind. The day before and the day after Thanksgiving always been positive, regardless of what the market does. Over only 19 losses in over 71 years. I have a trade. Remember this. I have a trade in my live trading. Wednesday prior to Thanksgiving, I'll be doing. Don't miss that trade if you're in my live trading on Wednesday prior to that. That trade can put a smile on your face by Christmas, okay? That starts the day prior to Thanksgiving, okay? That's next week. Let's look what happened in October, then look at November. So October, we open at 67.25. Does everybody remember we dropped in the first part of October, in the first 10 days, down to a low of 65.40? How many people remember that? So we've weathered the storm pretty good, haven't we, over the years? And this is how we do it. We keep our wits about us, and we figure out the best course of action. 65.50, and then we rallied to new highs. 69.53. That's about a 400-point rally that we put on after the low was identified. Okay, so if you look at it and you look at that daily chart, notice this is something I want you to notice. Notice the day after the low was created, we opened about mid-level of the low of the day before it turned. Mid-level the next day. Everybody get what I'm saying? So the market opened the next day about midpoint. So that's one of the things that we will notice if we do get a low to trade, okay? Does everybody understand that? Okay. And then notice, hold it, go back. There's more to see. You see the day after we open at the midpoint, we had a higher day and a trend started right there. Then we came back about 3 or 4 days later, tested the low, and it started again where we went higher. 2 bars went higher. Everybody sees the 2 bars. So you had an initial jump, pull back the test, and then another initial jump, and eventually the market took off. Okay, that's the way it happened. So write this down. This is important. Look for an opening about mid-range the following day. That's a sign that things might be falling or the low might be created if you get one. Okay, and then of course the market took off and made history. Okay, next slide. Now, if we repeat that percentage drop this month, ES would fall to 66.89. You say, well, whoa. We're down at 66.23. So November has had a bigger drop, okay? Took a little longer time, but November has had a bigger drop than October. That's a warning sign for bulls, okay? When you get a bigger drop, okay? A further drop down to 65.40, okay, would be a 5% decline from the month open. So if we went down to October's lows, it would be down 5%, okay? 65.40, write that number down. That's a big number. About 100, less than 100 points away, okay? Now, Chuck is very good in these situations because he stands back and digests data. I want you to hear what Chuck's got to say. Take it away, Chuck.
Yeah, I think one of the big things, Tom, is, we always drill in. I know you do such a great job of drilling in and seeing the details in the market. We gain perspective of the market by zooming out. We get details of the market by zooming in. And I think one of the things is you don't want to get lost in the details. If you look at this weekly chart of the S&P futures, we've all seen this massive correction down. But if we go to this weekly chart, I want to see if I can. Do I have the ability to draw stuff? I don't. Well, maybe I do. Hang on. Let's see. Let's see if we can draw a line here coming back from uh, where these low points were. And you
Hey
look
Chuck, you can
at.
take the screen share and you'll be able to draw from there.
No,
You got it. Okay, never mind. You're good.
yeah, it'll let me draw. It's not a very good drawing, but see if I can.
Hey, Chuck, do me a favor. Start from the beginning because you were talking real low. Talk loud where everybody can hear you. This is important, folks. Listen up.
Okay, so basically, guys, if we go in and we look at what this market is showing us, and I want to change to a red color here so we can highlight this. If you look at the way the market has been moving for the past couple of weeks, we see this kind of parabolic progression in the market. And we're a little bit below that right now, but I think it's worth pointing out that after that big correction in October, if we were just to do a straight line, and I'm not sure how I could do a straight line. Um, yeah, I tell you what, Jonathan, let me take over projection for just a moment, and I'll give it. I'll let you take it back in a bit here, but let's see. Make sure you guys are seeing the same thing I'm seeing. Okay, so S&P chart. Let's blow this thing up here. And let's go to a long view of the market. This is what we've seen out of the market for the past little while. You got that big correction down at the beginning of the year, and then you have this kind of rally. But if we run, let's do a trend line, add trend line, and we want to go back to some legitimate point of reference. How about the beginning of July 2024? And let's run a trend line up through the market, attaching to those last two lows. And I want you to see how well the market fits that. Yeah, we did have that drop down, but the market came back kind of rapidly and then tied into that line. So the perspective here, how far off is the market really? It's not that far off. Now, one of the things you can do in Roadmap software with your trend lines, I'm not sure if you guys were aware of this, go into chart objects, properties, and let's look at a regression channel. And bring this.
Hey, Chuck, explain how to use it for people that's never saw it before. It's a tool that we have inside the roadmap. And just explain, number one, how to do it on the roadmap, and number two, what it's telling us.
Okay, you're a little bit far away from the mic, but basically to put that trend line in, again, you right click and you can just go to add uh, trend line. That's different from an S&R line or a horizontal line. S&R is going to be kind of a straight line, draws itself really. So I'm not interested in using that one. That's at a specific price point. So we're going to get rid of that. With the trend line, I'm looking at how the market is progressing, what it's doing. And then we
Hey,
have
Chuck,
the
I
ability.
hate to interrupt, but I missed the first step. Do it by step. Step one, where do you go on the roadmap?
Okay. Again, I- I'm looking at a weekly chart, okay? Weekly chart of the S&P futures, and I'm adding in a trend line. Right click on that. Go to trend line. It's the third option on the right click menu under add. And you want to find a starting point, use a legitimate starting point. I decided to go back far enough to give me some perspective here. Went back to July, the beginning of July 2024, and just posted that there and then ran up the line. And basically, you can run this to wherever you want, but I ran it up to the lows of the past 2 weeks. And you can see how well that fits in there. Now, after you've got that trend line drawn, one of the things you can do is go up to the chart objects button, chart objects menu, select your trend line, go to properties, and turn on the regression channel, which gives you basically a percentage basis. What is a legitimate percentage away from the trend line? And you can see how the market at the beginning of the year got a bit weak. We know about that. That was the tariffs coming in and people doubting their success and everything that goes into that, right? So the political on that speaks for itself. I don't need to address it, but you did see the market drop down and and then you saw the market climb back up as things sort of normalized. Now the market makes the move back onto that trend line, that middle line, with this rally in June, the week of June 23rd. So you see that come back up, and then it sits on that line for a while, and then it gets a little bit spicy as we go into September, jumping up a little bit, kind of corrected back down to that trend line with that big sell off back on October 10th. Remember that Friday, Tom, October 10th, Xi
Yep.
and Trump exchanging uh, diplomatic courtesy, shall we say, trade war issues, right? And then you have the market kind of float back up to that top area that it was at the end of September, and you had a big, huge run at the end of October. Most of that gain on that week of October 20th, which was the second to last week of October, was made on that Friday as the market jumped up and then continued on into that last week of October, giving you that 69.5375 high. That's important to note that that is at the top of that regression channel, right? So that's probably a little bit further up than what it should have been. We correct in that first week of November, the 55.50, but then you get the market kind of elastic with the government shutdown ending and everything that goes on with that. And now we've kind of overcorrected, but it's not scary, I guess is my point. Now, if we come down and hit
All right,
this regression
hey,
channel,
Chuck, this is so important for everybody to understand. It's probably what I'm in my head seeing without does everybody here that has the roadmap understand how to bring what Chuck is bringing to the chart? This is important during this kind of market to know how to do this. Okay. John, I'm seeing a bunch of yeses, Chuck. So evidently you're getting A rated by people. Okay.
right? So the zoomed out view to me is less stressful than the zoomed in view because if I'm looking at this and I can see that the market could drop back down to what is that about 6400 area, like that's the bad side of seeing that. But that would still be inside the regression channel. It wouldn't be uh, crash type momentum. And from that high point, 69.53 to say 6400, you're talking almost 600 points down, which would be, what would that be, about 10%? So if you get that type of a move, that is corrective behavior. If you get more than that, well, then you got panic behavior. And you have a little bit of panic right now in, oh my gosh, what could this become? But at this point on this trend line, it's really not that far off of it, right? This is still kind of a controlled type market. I saw someone type in earlier, Tom, at what point does the market halt? Not for a long while. 1 and 2% moves, even 2 and 3% moves, they aren't going to hit circuit breakers. So, like, you guys have been spoiled. I'm just going to throw this out there. There has been some spoiling out of this market. So, circuit breakers are something that, yeah, if we're talking about circuit breakers, we've got a different kind of market. That's not what we've got right now. Hopefully, it doesn't turn into that. Now, if we go back to the swing, which looks at the daily, this looks a little bit more scary. But still, you've got that October 10th low, that 6540 quarter, which I think right now is the defining number in this market. Now, if we draw a trend line here from, let's take the September open, where would that be? That's on the second at 64.78.75. Let's go in and add trend line. And the nice thing is I can actually go through and see which date that is. So 64.78.75 right here. And let's draw this up. How are we going to connect this? Let's use those highs of the past couple of days. That sort of gives you an idea of what the trend line is like here. And let's throw in those regression channels. And you see that the market has been very aggressive, corrected back down, got aggressive again, corrected back down, come back to the mean, kind of rolling over, and now it's getting very aggressive on the short side. So the daily shows me an aggressive selling here that has gone beyond the regression channel. But let's not forget that
Given
we
the
also had
number that if it did make a low today, where the middle point is, given that number, where that line there would really be a good number right up there at the top up there. Yeah, that one. That's what I'm trying to do. Yeah.
Yeah, so that's about, let's see, what's the scale on that? 68.15 or so. So if we get back above 68.15, but we got to get above the 25.50 first.
Right.
So that,
exactly.
yeah, the low end here, which is climbing right now, that is, I want to say right around 66.90. What's the scale on that? Yeah, 66.90. So when do I know the market's starting to recover? If it can get above 66.90. When do I feel better about it? Above 67.25. Where am I going to go? Okay, this is where the market belongs, probably about 68.15 or so.
There's your numbers, folks. Write those down. This before he goes further. Start from the low and come up. Let him type those numbers into the chat. This is very
so 66.90 is the lowest number.
60. What is it?
66.90.
66.90.
Hey, what? Let me get set up here. Oh, Jonathan's got it. Okay. And then 67.25.50, the open of the quarter.
Right.
And then 68.15.
That's sort of your roadmap, aptly named, to how a recovery might look.
Right. Now let's go a little bit further because we've seen on the long, no need to panic, and I don't know why that trend line disappeared, but we'll go back to the swing. Trend line disappeared there. Okay, there's a little bit, concern. We have some concern here. And then we go and look at the intraday, and it's, oh my gosh, what is happening? So it's like the intraday is designed to get you details. You don't look at intraday to see the broader daily, monthly, weekly trend. You look at intraday to see what's happening right now. And what's happening right now is the market really kind of came down. You can see the reference bars here, RB2, X, 3. 3 went a little bit above X, kind of giving some false hope this morning, and I think that's what made the sell-off maybe a little bit more. But we go from that details of the intraday to the swing, which still looks a little bit scary, and then to the long view, which doesn't really look scary at all. Right? So you zoom out to gain perspective, you zoom in to gain details. Don't get lost in the details. That's the main thing that I want to stress to everybody. There may be a time where the market starts to induce panic. And I would throw out, just as a number to pay attention to, Tom, the October low at 65.40. I think that's going to be one that I would start to be concerned about. Right now, I'm looking at a market that's trading. It's going up and it's going down. Right now, we're in a downturn, but it's still going up and going down. So again, let me stress this. You zoom in to get the details, you zoom out to get the perspective. If you're getting your perspective from the zoomed in version on the detail, it might be a little bit panicky. Right? So as a trader, you want to take that panic and put it on the sideline, and the best way to do that is to zoom out. Go and look at those larger time frames. That's why we have those tabs.
Now, let me just give you a number here that Chuck didn't give you. The VIX hit, okay, at its low, the VIX hit 25.20. I would set an alert on my computer at 25.20, okay? If it got higher than that, then you're going to have another rollover and go lower. But as long as it doesn't hit 65.20, Genesis is going to have it set, okay? Zooming in, as Chuck said, okay? All right?
All right, I'll give it back to you and Jonathan.
Thanks. Great job. Everybody give Chuck a hand. Chuck is your go-to guy for what we just got. No one has that. I've been watching this go on for all these years. He's very good at what he just told us, okay? In all cases, okay, we've got the tools. You got to use the tools. Okay. Let's go back to our slides.
And Tom, that was the November VIX futures that hit 25.20, right?
Let me double check. Yeah, November, right.
All right. I guess eventually we'll get a rollover to December. The December contract, for your information, hit, looks like 22.32 or so.
What was it? 22.32?
22.32. Yeah. $22.32 on December, 25.20 on November.
All right, NVIDIA earnings, Wednesday after the close, the employment, see this other thing that throws a mix into everything. We're getting employment numbers for the first time Thursday morning. Let's talk about a catalyst. If the employment numbers come out, the odds on the Fed cutting rates in December have dropped, the last time I checked, about 40%. So you want to keep your eye on that after that employment numbers are posted to see what the odds makers are saying. The reason people are pretty negative is because we're about 85% we're getting a rate cut, and a blind man can see that you got to cut the rates. But unfortunately, Jay Powell, I guess, is below blind, because clearly you cut those rates right now and you would see a catalyst that would stop the selling, okay? because right now the market is factoring in these tech stocks. These tech stocks, unbeknown to a lot of people, are really affected. Their price is really affected by what interest rates are doing. Does everybody know that insight there about tech stocks being affected by interest rates? I think it's something that gets missed a lot of times, but it's very important. And if you got the fear of higher interest rates, guess what? That's going to affect the overall up move of tech stocks. Okay. NVIDIA earnings tomorrow after the close. Now, we have a market right now using our 3-day algo below the FTD low. Does everybody know that number for the FTD low? That's a key number evaluating the current market. Standing back, not zooming in, but zooming out. That's a key number, the FTD low, okay? And here's a question for the ages. How will you know when you've seen the lows? I thought that we'd seen the lows at 66.70. Now we got a pivot number today at 66.75. My pivot numbers are right on target because if you're using my pivot approach, you wouldn't have been long, because we fell out of bed. Now we're tracking back up. And that's important to note, okay? We're tracking back up. In fact, the NASDAQ opened today, you ought to write this number down, at 599.62, and the NASDAQ right now is at 598. That's how much we've recovered since those lows that were made earlier. In that recovery, stocks like NVIDIA have gone from their low up to 183. Apple has gone from its low to 67.50. MU has gone from its low to which was 225. It's now trading 231. Do you see the effect of the indexes on these tech stocks? Can't ever forget what the S&P is doing. So we're going to watch it. We got numbers. And we're going to watch those numbers, and we're going to watch time of day. Okay. I'm looking for a close above 67.25 on the E-mini futures. That's how I'm going to know that the low, 4 out of 5 times in place after that number, we close above it. That's 75 points from here, from 66.50. Don't have to be there today. To be there Thursday. And maybe it will be after Thursday, because after Thursday, you get the announcement at 8:30 in the morning. You got a lot of action in this market between now and Thursday. That's why I'm being very careful not to put huge amounts at risk in this kind of environment, okay? All right, let's go live if we can. Jonathan, do you have some stuff on Genesis that I could cover? Have you got that? Is that when we come back? It's when we come back. Let's go live right now then. Let's go live. Okay, if you look at the top of RB3 and you look at where the market's currently trading during Genesis, we're at the midpoint of RB3. So the question is, and this is a question that we can make money off of if we can answer it correctly, have we seen the low of the day? And Jonathan, what's the low of the day? Why don't you tell everybody to remind them?
It is now 65.94.
65.94. Write that number down. 65.94. Okay. And the numbers ladder above, right, is the 66.75, my pivot number. And then we get the Genesis number to add in once we get Genesis formed and completed. Okay, that's great. Super. All right, so go to the daily, Jonathan. Go to the daily chart on here and let's look at the E-mini on a daily. High today, 68.067 area.
Yeah, 67.08.
Yep. Now let's do another calculation. What was the low was 94. Add the average true range to that, Jonathan. If you add it to the low, where would it put resistance coming in? Looking at it that way.
65.94 plus 96 points. 66.90. Chuck gave that number, 66.90.
Folks, that would be quite a move. We got it that high.
You do this a different way, 67.08 minus 96 points. 67.08 was the high, 66.12 was 1 ATR lower. And Tom, I understand Fed member Barkin is speaking somewhere and hinting at possible rate cut. So
Who is it? Which Fed governor's doing that?
Barkin, Fed member Barkin, Barkain.
Okay.
So, Tom, Barkin is the governor at the Richmond Bank.
Virginia. Okay. What I would like to do is got a high of RB3, 66.18. Put the QQQ in there because I think that's an interesting market right now with the recovery you've had. Put the QQQ in there. What is that? 602.55. That was I think my pivot number I gave people in the Magic 5 this morning. So you got to get higher than that, 602.55. Okay. So the importance of Genesis is that if we make a high out of Genesis, you will see buying step in. Just keep in mind, you've had a pretty good recovery to get this far, and you're going to run into a lot of resistance. First at 66.75 and then at 66.95. Okay, let's look at a couple stocks also. Look at Apple. Okay, the midpoint of Apple is 268. You put a line there on Apple at 268. Apple's, there's resistance on Apple. NVIDIA, put a NVIDIA out there. I think the number is going to be, NVIDIA has got support at 182. So NVIDIA is outperforming right now. NVIDIA's outperforming, okay? And that's a positive sign. They're not down at the lows, they're up at the highs of the day. Since they made the lows. That's another way of thinking about it. All right, so you got a market that is trying to recover, and let's go back to our slides, Jonathan. I can't emphasize the importance of this time period. Let's go back to it. It's the Genesis time period. I've been waiting all morning to get here, so let me tell you. Look at yesterday's Genesis, okay? Go to yesterday's Genesis. Yeah, the midpoint stands automatically calculated between the high and low. Yesterday, Genesis gave a bearish signal. How good was that? How good was yesterday's Genesis when it gave the bear? Well, it's pretty good considering it told you where to get in and where to get out. Pay attention to Genesis. It will be posted 12:05, 12:30, 5, and then 1:05. A very good time period to pay attention to Genesis. So it's up $5.50 a day. Did anyone here take the Genesis trade yesterday? It's an unbiased approach looking at, I've got it, it's programmed to overcome my own bias, okay? And Kevin did, a lot of people did, everybody in Genesis did. I know you're happy. So here's what we're gonna do. Here's what we're gonna do. Next slide, please. That's enough said. Get joined to Genesis right now. We got it at 897. Let's watch the tape from yesterday. I'll be back at 1:30 today. I think the analysis was right on. Let's see where they take us. But Genesis will be published at 12:05, 12:35, and 1:05. Check your Telegram channel. If you're not a member, you can join at this low price of $8.97. You need it. It removes your emotions from it when it tells you to go short or go long. Do it, Jonathan. Play the
Hey,
tape.
everybody.